Thanks very much for joining in this afternoon. Well, what are your thoughts on this big line of OFSs that we can see from the government's table?
Yeah, I think that's been a recurring feature in the last couple of years, and as rightly pointed out, this puts a lot of pressure on the existing share prices, especially those holders who have been invested in it for the longer term. They tend to see a lot of volatility without any reason of theirs. So I feel a better way of doing this would be to structure it in an ETF kind of a way. The government did it a couple of months back. If one does it, I think the impact would be much less than what it is if it does a pure OFS. So that will probably be a better way of doing it. So maybe these 8-9 companies, you could launch another series of ETF and try to sell it in the market. And there has been a very strong retail participation in those ETFs, and people have made money there. So you could expect another very good, strong responses to those ETFs. So this is the best solution in my view for the government to get their share of pie, as well as these stocks may not see a very huge impact on the share prices if it is done through this way.
Srivatsa, hi, good morning. Prashant here. What do you make of these two specific names? One is REC and PFC. Without talking about stocks, if you can talk about the business, if you own them, and just prospects for these businesses.
Yeah, I think they are a direct play on the upcoming or rather on the power sector in India. But I still feel that there is a decent amount of stress in the system, especially in the private sector space. And one doesn't know what kind of hits these companies could face probably in the next 6 months or 1 year down the line. So these companies have had the best in the last 1 year because they have seen a sharp fall in their rates of borrowing. So that is probably behind them, and going forward, probably at least for their blue chip kind of a customers, they're going to see huge pressure from other private sector banks who want to expand in the corporate side. So I would kind of stay away from these, from this specific sector, because we have seen the best of both worlds in the last 1 year, and you'll probably not see the risk playing out in terms of high NPAs, which can come up in the next 1 to 1.5 years.
Okay, all right. So just one quick word on the oil marketing pack as well. I am asking you about these sectors because, these are companies from these spaces are candidates for government disinvestment, as we just heard. IOC is one of the oil marketing companies in which the government is planning to do an OFS. Are you bullish? So far, if you look at stock prices, this entire news that they're going to fix prices daily has kind of overshadowed monthly consumption numbers. Consumption numbers for petrol, diesel, etc. have been very weak for the last 3 months, but it's, I think, kind of gotten overshadowed by this daily price fixing thing. What's your view?
Yeah, we are quite positive on the oil marketing companies. The reason being that bulk of their profit comes from the marketing side, which is kind of a proxy to the branded, space. So if one looks at the branded space, I think the barriers of entry are very high. So the last 2 years, we haven't seen the likes of, say, a Reliance or a Shell or an SR making a big dent. They have huge, strong moat over there. And given the fact that the government has been very consistent in its policy of allowing them a free run, I see a very good prospects even going ahead. Yes, the valuations are on the higher side, but I think they probably reflect the kind of businesses that they are in. So I think if one takes a view that the same scenario will continue over the next 2 to 3 years, I would still argue that probably their branded business has scope to go more. So we are still holding on to these bets in the oil marketing space.
Okay. What's your thought with what's happening with a lot of these pharma companies? For example, we learned that Sun Pharma's second biggest plant to Halol has 11 observations, but another company has cleared an inspection successfully. It remains patchy. How do you choose?
Yeah, see, I think if you look at the last 6 months, I guess we've had more share of positive news than negative. So one needs to remember that these problems have existed for more than 24 to 36 months, and typically it takes that amount of time frame to resolve the issues. So with the companies that are out of the system, or rather out of the US FDA issues, we see strong growth ahead. So those are clear investable names. But companies which are not yet out, I think we see a reasonable chances of them getting resolved in the next 6 months to 1 year, because 24 to 36 months have already elapsed. Now, what is to be noted is the top 5 to 10 companies have a very strong pipeline ahead of them in the next 12 to 24 months. Which should kind of bear fruit should these problems get resolved. And they are also play on the domestic as well as in the emerging market, which is a very strong branded franchise. So I've been positive on pharma for quite some time. I mean, I've borne the brunt in the last 6 months, but I would still, buy them at the current levels, because I see decent value in them from a medium-term perspective.